Welcome back to Yahoo Finance. I'm Jared Blickery. We have just about a minute to go to the bell. I want to bring into the stream first David Nelson, Belpointe Wealth Management, and Sarah House. She's a Wells Fargo senior economist. But first, let's get to the markets here and see what the day's price action has in store for us. Now, the Dow is the laggard of the day, but it is up 0.5% here. You can see that's good for 183 points. S&P 500 up 0.9%. Looks like it's at session highs or close to it right now. And the NASDAQ, big outperformer of the day, up nearly 1.5%. We'll get a check inside the NASDAQ 100 where we see the mega caps still holding on to some nice gains off their highs a little bit. But check out Microsoft, up 2%, Alphabet and Apple, just a little bit less than that. And what stands out is Tesla. Tesla's up 4.5%, clawing back some of those nasty losses it had in the rest of the day. We also take a look at NVIDIA. That stock's up 3.5% to another record high. And as we march towards that closing bell, just a quick look at the sector action for the day. We got tech and communication services, the big outperformers. They are.
And that wraps up the trading week. Again, we're looking at gains across the board. Let's see where things settled. If we can pull it up, the Dow closing up 180 points. S&P also up nearly 1%. The NASDAQ was the outperformer for the entire trading day, closing up 1.5%, building on the gains that we saw yesterday. We have David Nelson and Sarah House here with us to break down the action that we saw not only on the market side, but also what we've seen through econ data. David, let me send it over to you first, because when you take a look at the market's reaction, it looks like the market was satisfied with this report, even though it came in slightly weaker than what the street was initially expecting to see. From your view, though, was it strong enough, or is it strong enough for where we should be at this point in this recovery?
You know, you're breaking up, but if I think that was for me, at this point in the recovery, look, today's job number was a little soft. Maybe something of a Goldilocks number, and that was why growth outperformed today and long duration equity. But make no mistake, this is still a pretty strong number. I think what the message was for the market today was that the Federal Reserve kind of takes some of the weight off their back, because at this point in time, at 500,000 jobs per month, that pace would imply 16 months to get back the 8 million that have been lost, that we need to get back to pre-pandemic levels. That was kind of good news for the market, kind of a Goldilocks scenario for today, kind of a bull thesis for, at least for today.
Well, Sarah, I want to get your take on the report, and you can talk about the Fed's calculus as well. There's a lot of speculation about when they talk about tapering. We know they're thinking about it, but when do they actually talk about it? Is it June, July, August, Jackson Hole?
Well, I think this report today suggests that they don't need to do it immediately. So we're still seeing that hiring is picking up, but it still remains somewhat subdued when you compare it to really what it could be. And I think that's the most interesting thing in today's report, is that as solid of a gain as this would be in normal times, it's still not as strong as what it could be when you look at what's happening on the demand side for labor.
And Sarah, expand on that a little bit more, just in terms of your view on where we stand in this recovery.
Right. So we're certainly making strides, but we've really seen demand for whether it's workers, whether it's for goods or services, outstrip the supply. So the focus previously has been more on parts and materials, but increasingly we're seeing that this extends to labor, particularly in the service sector. And so that's actually holding back how much businesses can do right now. So for example, we have the NFIB small business survey. So the labor components came out yesterday, and that showed that another record high in terms of the share of small businesses saying that they can't find workers. The number is now up to 48%. And so that's limiting the overall pace of the recovery. And at the same time, it's putting upward pressure on wages as businesses have to compete more to get workers back to the job site.
David, I was reading through your notes about the biggest risk we face, and I was particularly interested in your comments on cybersecurity. This is something that's been popping up. We've seen various attacks in the U.S. and abroad. It seems to be underpriced to me and some others. What do you think about this?
It's obviously a pretty important topic. You know, today it's a pipeline or a meat factory. But what happens when it's the electric grid or the New York Stock Exchange or perhaps a military complex? You know, Putin, whether or not he's complicit in letting this happen or he's behind it, doesn't really matter. At some point in time, the administration is going to have to deal with this, because at what point in time do we really consider this maybe an act of war? So it's obviously something that we're going to have to deal with as a society, but our government is going to have to come up with an answer. Now Biden is going to be meeting with Putin. They're going to have to lay down some of the rules of the road, this kind of the rules of war, because right now, like it or not, we're in something of a war, and it can affect business very dramatically. And I don't think the market's priced that in. That is the potentially black swan event somewhere down the road.
And David, speaking about that, the market hasn't priced it in at this point. How big of a pullback or of a drop could we potentially see from something like this?
It would depend on what the disruption was. If it was something like the electric grid, forget about it. It would be a pretty big hit. The other risks that we face right now are, maybe the most obvious is a COVID variant that we haven't priced in, that our vaccine can't use. And the other risk, of course, is China. That's a dynamic that will play out for years to come.
Well, Sarah, I want to get your views on where the economy is heading, and also any potential headwinds that you see, maybe some things that are out of left field that might not be on the public conscious right now.
I think right now we're roughly running at about as fast as the economy can go. And I think in the current quarter, we're seeing what's likely to be the peak rate of growth when it comes to the reopening and the recovery period. So as we move further away from the fiscal impulse that we saw with that latest large round of stimulus last March, and then also as you get further away from this initial burst of pent-up activity and pent-up demand that's come from the fact that we have seen vaccination rates rise so much. We have seen case counts fall pretty dramatically. It's made for some easy base effects, but I think as we look ahead, we are going to see a more measured pace of growth, still strong by historical standards, as you have consumers in a great financial position to spend. And in many ways, the supply issues we're seeing now suggest that growth can remain strong further out into 2021 and on into 2022, as you get things like inventories that need to be rebuilt. And so I think overall the outlook remains pretty positive, but I think we are getting to a point where we're going to start to see some moderation in what's really been a breakneck pace of growth.
I think you're muted, Shauna. Tell you what, we got thunderstorms
muted.
here.
I always mute myself at least once a show, so now we got it out of the way. But David, I just wanted to bring our attention back to the gains that we saw today, with the NASDAQ up 1.5%, building on what we saw yesterday. When you take a look at the opportunity in specifically some of the big tech names, is there still a reason to buy, or will we likely continue to see some of the volatility, especially what we saw at the start of the year?
I think to that point, if you look at the market, it's been fairly benign, but drifting higher. But underneath the surface, it's a ferocious battle. Take your pick: big versus small, growth versus value, secular versus cyclical. And investors have been rushing from one side of the lifeboat to the other. I still think the pro-cyclical trade has the best legs. I would caution on valuation. Think back to the dot-com bubble. Microsoft traded at 32 times sales. Today it's 11 times. Some cloud stocks out there, just because they've gone from 50 times sales down to 30 times, doesn't mean they're a bargain. Move down the valuation curve. There's a lot of value out there. Yeah, somebody's muted.
Oh, my goodness. I'm trying to mute all the thunderclaps here, and I guess that's our problem. All right. Thanking the panel here, David Nelson of Belpointe Wealth Management, and also Sarah House, Wells Fargo Senior Economist.